Technologies on its second day as a public company, a bit of a pullback after the Carlyle-backed company jumped as much as 10% in its debut. Yesterday, its debut, though, was better than expected, suggesting there's still retail appetite for Indian IPOs. Carlyle bought Hexaware in 2021 and sold about 21% of the stake through the IPO. It said it will continue to have a controlling stake after the listing as it expects more AI-driven growth from the business. Kranthi Bathini is Director of Equity Strategy at Wealth Mills Securities, joins us live from Mumbai. Kranthi, lovely to have you on the show. Thank you very much for your time. Could you give us your reaction and take on Hexaware Technologies?
Hi, Tanvir. Good morning to you. Tanvir, it's like a old wine in a new bottle. That's what Hexaware is coming up in India. But given the kind of the traction they gained the past few years after the delisting, we can see some kind of attraction the company is gaining at this point of time. We need to see how the earnings momentum that's going to take place in Hexaware. By and large, we are not in a way to go and jump by the stock at this point of time. We're going to observe the levels, and any dip in the stock, any significant dip in the stock, it can be a long-term bet for the investors who are looking for the long-term returns in the IT space and AI space is concerned.
Right. Kranthi, how are you looking at the whole IT space in lieu of, the services exports that go out to the U.S. and there being concern on whether or not the trade tensions, tariff tensions could impact that industry?
On a long-term basis, we are quite bullish with respect to IT space is concerned, despite of the worries of the tariffs are concerned, because it is also considered as one of the essential service, and also the changing the things will take time. So with depreciation of rupee, which is going to benefit these companies on a medium to long-term basis, and also given the kind of growth projections that are coming in U.S. markets are concerned, and we can expect the IT budgets to go up in the coming quarters. So given the kind of medium-term valuations of Indian IT companies are concerned, for a longer-term to medium-term investors are concerned, IT stocks looks very attractive to be at this point of time. So we are quite cautiously optimistic with respect to the fundamentals of IT companies are concerned in a medium to long term.
What else do you like right now in this fall? What else are you buying? Because there is a sense that right now is not a good buying opportunity in the Indian markets because there could be a further leg down for the markets in terms of further correction and selling pressure gripping the markets.
Yeah, Tanvir, as in for the Indian Nifty is concerned, whenever it comes below 23,000 level, we can see some kind of a negative sentiment is hovering around the Indian markets. So with respect to IT large cap is concerned, the favorites can be the Infosys Technologies, TCS and HCL Technologies. And there is a broad spectrum of the mid-cap ITs are concerned due to their geography and also the domain they operate, like KPIT Technologies, Persistent Systems. And also there are some mid-cap IT companies which are, with respect to AI is concerned, they're gaining their momentum, and also specific companies which are in the domain of data centers, they are also looking attractive, but they're not at a very cheap valuations. They come up with the price, but what we are witnessing last few days on Indian market, some kind of accesses are getting eased. That's where the opportunity lies going ahead.
Right. Kranthi, what's a big risk for the Indian market and how worried are you about degrowth?
Yeah, this is one of the key concerning area. A couple of quarters back, Indian market was a favorite destination for all the investors across the globe. But last 3 quarters, some kind of a slowdown, softening of the growth we are sensing, and also at this point of time, the corporate earnings are not enthusing the market at this point of time. That's where the key concern area. So how the corporate earnings going to pan out in the next couple of quarters? That's where the key thing we need to wait and watch, and also the statements from President Trump administration that also impacting the sentiment of Indian markets in a medium to short term. These are the concerning areas we are concerned. And also, what we witnessed is a exodus, unprecedented exodus of funds by foreign portfolio investors from India. So when India will become a favorite destination to them, that's where we are looking forward. And also Indian market have a tendency, whenever there are excesses are built up, they try to get eased in a medium term. And once the earning traction comes, they recompense the investors on a longer term basis.
What are the top 3 stocks, Kranthi, that you're buying right now that you can reveal to our viewers?
We currently focusing on the large cap like names like Larsen & Toubro, Reliance Industries, Hindustan Aeronautics in defense. These are the top companies we are focusing, and also companies like CZ Power, which is pouring into the semiconductor space. These are the companies we are looking forward. As I mentioned to you, the IT stocks, the large cap IT stocks also looking very attractive. And also the hospital, the healthcare segment also, this sector got insulated with the global shocks. So it is more about the domestic centric. This sector also looks very attractive to me at this point of time. And also we have been bullish, quite bullish with respect to the defense stocks. Defense stocks, they rallied a lot. There can be, what we witnessed a couple of days, some kind of correction in these stocks, but on a longer term basis, given the kind of earning visibility and also order books are concerned, these stocks looks very attractive to us. Any kind of dip in these stocks, it can be a warranted buy.
Wonderful to have you on the show, Kranthi. Thank you very much for joining us and giving us your perspective on Indian equities. Here's one more look